Ashu, thank you so very much for joining us on ET Interview. We will, of course, be talking about both the state of the mutual fund industry with you and the state of the markets. Let's start with some industry-specific questions. Now, asset management companies have had a trying time over the past year and a half, starting with the ban on entry loads. Now, do you think that regulatory intervention in the Indian asset management industry has been harsher than it has been elsewhere in the developing world?
I think firstly saying trying times is an understatement. It has been a redefining period for the industry, and interestingly it is not just the entry load but the spate of regulatory interventions, changes that have happened in the last 12 months. In fact, the way I put it internally is I eagerly wait for Friday, not out of joy, but out of a little bit of concern, because almost close of business, you seem to have a new circular out. I think in no other market have we seen that much of regulatory change that quickly with that little time given to implement.
So the rules of the game are changing too quickly for the industry to adapt to them?
Yes, they are changing too quickly. I think, you know, if I spend a minute on the entry load, if you look at the thought behind it, there's nothing wrong with it. By and large, when something works for the consumer, it adds a lot of growth to the industry, because end of the day you grow when the consumer is willing to sort of invest more with you. But there are two problems. One, literally we were asked to implement in 4 weeks, and for an industry which is still very nascent, hasn't really seen that much of growth or penetration, it was a bit soon. And secondly, in 4 weeks, how are you going to change the business model? And to top it, if the driver is investor protection, better disclosure, I wonder whether just making the loads go away, you know, was the only solution. If I look at the approach to doing away with loads or getting better disclosure to UK, which is another market that is embarking on something similar, it's all about making it clear for the customer so that the customer knows what he is paying. It's not about the mechanics of who's being charged, who's paying, etc. And therefore, that's another way of looking at things, right?
So the regulator could have approached this differently?
Perhaps. And second, look at the other changes. I mean, what's welcoming is, I think there's a lot more focus on improved valuation and transparency, because that raises the bar, that improves the quality of the asset management business. But on the other hand, if you look at a lot of stuff that absolutely gets into detail about how this should be done and should not be done, with literally no flexibility on how you might want to manage your business, that's a bit of an issue. What was good is, I think India really stepped up on anti-money laundering, but if you just look at the way it's all happened on the asset management side, it's caused a number of distribution channels to literally say, look,
we are not interested in selling.
We're not interested, because end of the day, these are businesses. They have a profitability element angle to it, and if the incentives are good enough, then they will grow, they will invest back, otherwise not.
Then how do you respond to SEBI chief's comments that you guys are perhaps whining a bit too much, because maybe it's the inability of the 3,000 odd mutual fund schemes to actually match customer needs rather than any regulatory change which has really hurt this industry?
I don't think that in a way is sort of the right outcome of an analysis. Because for a minute, if I look at Fidelity, we don't have a very large fund range, right?
Yes.
Okay, we have all of 12 funds,
yes.
And we have 6 equity funds, 5 domestic and 1 global, and 1 which is a mix between 65 India and out. 5 out of the 6 are top quartile performers, out of which the tax advantage fund has won every award possible and 3 years in a row, right? Fidelity equity fund, top decile. And outperformance versus its benchmark, consistently 6%, right? It's not change. And if I look at special situations, There again, if you looked at its 1 year, 18 months, again, stellar outperformer. So when you talk of asset management, you talk about investment performance, right? So performance is there. If I look at the scale of our funds, I don't have any fund which is small in size. I think almost every fund is about 500. The main funds, I mean, like Fidelity Equity is 3,000 crores. So you have scale, so you're not really charging the 2/4 or 2/2 as is the much sort of misplaced understanding from the broad market. So it's not expensive.
Sure.
But despite this kind of performance, over the last 12 months, from a net point of view, we've not really seen much addition. Now, the key
Give me an
question,
idea of how AUMs for you have behaved.
well, AUMs have grown, and likewise AUMs have grown for the industry. But the key is net sales. You look at the growth, and I'll just share some top-line data, right? 2007 calendar year, if you looked at AUMs, end December were 2,11,000 crores. End December 2008, down to 1,08,000 crores. Understandable, right?
Sure, because of what happened in the market.
You just saw a free fall in markets.
Sure.
If you look at AUMs as at end June, they're about 2,03,000 crores. Key point is, markets from its low point in March of 2009 to now have gone up nearly 200% on an absolute basis. So that's the growth. In the last 12 months, I think the opportunity to penetrate deeper, to get a much wider customer base, which had learnt from the markets, I think was great. And to me, it wasn't the fact that entry loads were taken away. The worry was that there was no playing field. I mean, forget lack of playing field. There wasn't a playing field. Because during the same periods, we all know what commissions were allowed to be paid for ULIPs. Well, it's not only about ULIPs. Company fixed deposits paid crazy commissions. And you have to ask yourself, what's the regulation around company fixed deposits? I'm not talking about banks. And structured products, what's the regulation around it? What about investor protection on that side?
Sure.
So if there was a level playing field, then we could have started talking about what has the industry done and not done. Because performance, I mean, I can speak for Fidelity, has been great. The other thing, just to kind of compare and contrast, 2009, new premiums into unit-linked plans were close to about 30,000 crores.